Everybody, welcome to another recap. Looks like we got all our technical issues sorted out. Hope there's no blurriness coming through on the recap. But for those who don't know, this is Trader Travis. I have my partner in profit, Peter, on the line. We are regular traders and investors showing how regular people can do what the experts say is not possible, and that's beat the market on a fairly consistent basis. Of course, everything we're sharing is just for educational purposes, just sharing what we do. We're not here to give you investment advice. So with that, I will go ahead and start this week. All right, so what I'm going to do is pull up SPY. That's the ETF of the S&P 500, is my ETF of choice to trade. For those who follow the one stock blueprint and know what that's about, I found that I can trade this one stock and it's amazing. I can get safety, I can get diversification. Believe it or not, you're like, how can you get diversification with one stock? And in the blueprint it outlines that. I get diversification, safety, I get income, and I get growth, all from one stock. And it's the biggest discovery I've had in 20 something years. And that discovery came from chaos. The chaos of, oh, my wife wanted to leave me, my stepdad dying, all these other life events happening where I was just drowning in drama. And I was like, I have to simplify what I'm doing. And I'm coaching. I need time. I need, my brain was just frazzled. And I was like, I don't have the time or mental capacity anymore to kind of be an active trader, like sitting in front of the computer all day with all these active trades. And I was like, I need to find a way to still make money, but, have set and forget investment style. So like buy and hold. I was actually jealous and envious of buy and hold investors where they can just dollar cost average. They don't even have to look at the market. They just sit as a total passive strategy, and it works over the long term if you keep your stocks long enough. Does it have flaws? Absolutely. But I'm not so naive and ignorant and a bigot. I'm not an active trading bigot where I'm like, oh, buy and hold is stupid. So I used to be. I'm not anymore. So I started studying them, and I said, okay, how can I take the best of buy and hold and integrate it into what we do? And that's where I came up with the one stock blueprint, again, mainly created from the chaos of my personal life, trying to simplify what I did even more. And it worked out. It worked out to the point where I had changed my spreadsheet here. I was up 100 and something percent, as we showed on previous recaps. If you weren't a Success Academy member, you did not know this, but previously what I had done was add my open trades into my results. And so it looked like I was doing better than I was. In the members there, in the case study videos, I showed people, I'm like, well, no, it's actually not up 100%. My book profit was only like 40, 50%. And to help me out emotionally, what I did was take out of my open trades out of the results. So the results you see here, up 45% growth, 37% of that is from personal contributions, 9% is from stock market performance. That's booked profit. However, I still have trades open. So I have call option trades open. Some of those are up like $2,000. That's not reflected in this performance because the way I report my results is if I assume I'm going to lose 100% on those trades. And it just helps me mentally. It helps me not to fall in love with profit. That's why I adjusted this spreadsheet. I was falling in love with that 100% gain. I was like, this is not accurate. I need to know exactly where I stand for the year because we're at October. I'm starting to wind down for the year. I need to know if I hit my goals. And so far, it looks like I will, the 60% growth. So anyway, I have call options trades in here. They're up maybe $2,000. So that I bumped this 45% growth up to 50 something percent, give or take, right? Also have some cash flow trades, aka credit spreads. They're open. They might be up $1,000. So once I close those out, they will be reflected in this. But if I take a loss too, this could go down. So I always keep that in mind. I doubt I'll take a loss on them because I have some insurance. I have a bunch of puts. And speaking of puts, this 45% growth factors in all of the insurance I have for my portfolio. And that's another reason why it's so low. I think I've paid for my insurance. Looking at this account, I have $17,000 worth of puts. That is a lot of puts, right? So I have earned enough performance to pay for those. If I had zeroed those out, I'd be ahead, more than 17 grand. Or if I didn't buy these puts, that's another way you can look at it. If I didn't buy this insurance, I would be ahead 17,000 more dollars. But it is what it is. I bought insurance, a lot of insurance. And so that's already paid for. I've already earned enough profit to pay for that insurance. So I can book that insurance this year and the insurance policies are like 2-3 years out. So that insurance will carry me through the next couple of years, even though, I paid for them this year. So that means if the market crashes in the next 2 to 3 years, you will see my performance skyrocket up because I don't have the cost of those puts anymore. All I have is the gain of those puts. So that's it. All right. So that's all I have to say about that. Apple has earnings tomorrow. The market's going to close in 2 minutes here, so you might hear a ding as we're talking. I was in Apple. I think that's one of the trades I was up 1,600, close to $2,000. I booked that profit today. I chickened out. I'm sorry. I got super nervous. Generally, you have 3 things in your trade plan. It's part of your trade plan when it comes to earnings. When I say I chickened out is I went with my backup plan. So with earnings, you have 3 things. People say, what do you do with earnings? Well, there are only 3 choices that at least I use. It's you can stay in, right? I could have stayed in my call option trade that was up $1,600 profit. If Apple jumped up on earnings, I would have made even more money. Okay, you can buy insurance, stay in your trade, buy insurance for that trade, or you can get out, right? That's if you're in a trade already. So stay in with no insurance, just go without insurance, stay in and buy insurance, or get out. Right? That's if you're in a trade. If you're not in a trade, let's say Apple had a new signal, a new entry signal, we know earnings is coming up, then you have 3 choices again. You can stay out, wait until after earnings. You can get in with a very low risk amount, knowing earnings is a very volatile event, and you could either make or lose a lot. Or you can get in and then buy insurance. So those are kind of the 3 options I have. Since I was already in a trade, I took one of my 3 options. I got out. I got back in with profit only. So I booked my profit, $1,600 give or take. I got back in risking like $300, and I did what they call a strangle. It's a typical earnings trade where you buy a call and a put. So no matter which way Apple goes, I'll make money. Apple does have to jump a bit, but even if I lose on all of it, I only lost 300, which was some of my profit. So I risked some of my profit. So that's what I did with my Apple trade. I'm sorry that it was like up 100 and something percent. I was just too nervous I was like, generally I would stay in it and buy insurance, but I was like, still, I want to book that profit. I was just too nervous. So I honestly chickened out this morning. I'm just being completely honest, because my initial trade plan was to stay in a trade and buy insurance. I was like, oh no, let me cash this out and then get in a strangle. So that was,
in essence, though, if you had purchased the put, you would have been like you were in a strangle again.
It would have been just an off balance strangle, because it was a psychological move. Peter's right. If I had bought insurance, it's the same thing as a strangle. It would just psychologically felt better to take that money off the table.
It always does until it's funny when I was talking to my buddy today, and he's trading around earnings, and he says that he's like, how do you deal with that? And I'm like, well, you have to have a plan, but he was saying he booked his profit and he doesn't, 4 o'clock. He didn't want to. He didn't want to see that he lost a lot of profit. So you just don't look at it after earnings.
Yeah, exactly. Yep. So that's that. So that's what I did. And the last thing I will cover is cover my performance competition. I was going to talk about the mindset around cheap stocks, but I want to make this a short time. I don't want to take you too much time. So for those who don't know, I'm in the U.S. Investing Championship. And I wanted to show you, we talked about this a couple of recaps back. This is supposed to attract the world's best investors, and the people who used to be in this competition. If you ever heard of a book called Market Wizards, a lot of the people in that book are people in the past who won this contest. So as a young guy, new trader, always had a vision of being in this competition. I dreamed of it. It was like a lifelong dream. But the competition was closed. It just recently opened back up. I think the last time it was open, it was in the 80s. And so this is supposed to attract the world's best investors. As a matter of fact, a couple of these guys on here are sons of the people who originally won the contest back in the day, 70s and 80s. They are people who studied under like William J. O'Neill and things like that. So all I'm doing is showing you that this is, this is supposed to attract the world's best investors, and I'm showing you how they are doing. So if you're not doing as well, or you can compare your performance to that. Currently, they have me in the wrong division, but I'm, I think, 3rd overall. Yep, 3rd overall. But look at this. This is Money Manager. This is mutual fund managers or people who professionally look at their performance, 0.8%. There are more people. You can see 96 people have entered this contest, but we're the only ones on the leaderboard. You don't get on the leaderboard unless you're making money. So either or you didn't report. So I assume a lot of people are either losing money or they just didn't report. Maybe they're being slick and waiting to the very end to report and it come with this huge return. I don't know. But just for me and transparency, I wanted to report mine every quarter. These guys down here in the stock division, some of them own hedge funds and things like that. They also have their own money managers, Stanford graduates. I was telling my wife, I'm like, gosh, little country boy who live in Idaho. I'm from Virginia, but I was looking at the sheet, when they list their credentials. I'm like, these guys are like Stanford, Harvard. I'm like, well, he was like, can you send me a write-up of your bio? I was like, what? I'm going to see a little country boy from Virginia. I trade at home on my broken laptop. I was like, what am I going to say, right? It just looks so pitiful next to all these guys. Like, I'm from Harvard. But my wife, bless her heart, she was like, no, that's actually a good thing because it shows you that regular people can succeed at this. And I'm like, there you go. She's like, you're like the poster child for the regular average Joe. I was like, Joe or Jane. I was like, yeah, that's what I'll be. So to show that, hey, you don't need to go to Stanford or Harvard, have a PhD. Average people who grew up like me on a 5-gallon, using the bathroom in a 5-gallon paint bucket, grew up dirt poor in Virginia. We can learn this and succeed at this. And so that's the message I want to leave you with, is that don't get intimidated. Don't think that, hey, I'll never learn this. There is a way. If you work hard enough and you're committed to becoming successful, because success does leave clues. And with that, I will turn the floor over to Peter.
Hey, I got a quick question for you. So you were at the 22.6% last week. Has it changed?
Yeah, I'm up more, but we don't report. You have a choice. You can report monthly or quarterly. I chose to report quarterly. It's just easier. It's too much work for me to report monthly, but no, it's a little higher now. At one point, I was up 46%, but I was an idiot to go on too much risk and knock my performance in half. So now I'm being conservative, and that's my method. When you lose a lot of money, a lot of people are aggressive to try to make it back. Wrong. That's how you go broke. If you lose a lot of money, the way to get it back is you have to scale back and be super conservative. The only challenge is it takes you about 3 or 4 times as long to recoup that money than as it took to lose it, because I lost it in like a month, and I already know it. It's going to take me 3 to 4 months to get back there, and that's just the price you pay for being an idiot. And so now it's slowly.
Don't I know?
So, yep, we've all been there. So
we talked about it before. It's like you cannot fail if you don't try. That's just what that comes down to. You can't fail if you don't try. The difference though is you can't ever get ahead either. You'll always stay the same. You have to get out there. Failure is not a bad thing. Failure is a great thing.
Yeah, it's a learning experience. Yep.
Yeah. I think schools have finally started to catch on to that, because it used to be back in the day when we went to school, you couldn't fail. You know, it was a bad thing, and they really made you feel bad about it. So
can I say something on that?
Yeah, go ahead.
The biggest thing I learned from a millionaire, he said, failure is an event, not a person. You're right. In school, failing is a bad thing. You get an F. They make you feel bad as if you're a failure, right? They don't make failure seem like an event. The F is just an event. It doesn't mean you're stupid or you're a failure, but school does make you feel like failure is personal. You're a failure if your business fails. No, that was just an event that happened. I learned from the event, I move on. So always remember that failure is an event. Failure is not a person. You're not a failure. You just had a failure event. So Anyway, that's it.
So speaking of failures, no, I can't transition into that. But all right, I'm going to cover real quick one of the trades I'm looking at, and what I was waiting for was what Apple is doing today. Now, this could be a one-off just thing because earnings are tomorrow, and if you look back at Apple during earnings, it reacts quite violently, and there's really no rhyme or reason to which way it's going to go. You can do your research into this, and I've already done it. You can look at earnings that are positive and a stock drops like a rock. It doesn't make sense, and vice versa. So one thing to know about earnings is there's they're unpredictable, right? And that's why we talked about strangles and straddles, because it kind of puts a predictability on an unpredictable situation, because you're in a position to take advantage of one of those unpredictability parts. So anyway, so Apple was a trade that I wanted to get into, but I was looking at the green weekly that triggered a long time ago, right around this point here, I think. And I hadn't been following it. So when I finally, saw Apple was making a lot of new highs, I'm like, if I wasn't really following it, it's too late to get in. I don't like to try and chase the boat after it's left the port. I'll just wait for it to come back into port. So I'm waiting for this. You see this back here, it happened. I think this was in April, and from April to June. There's no guarantee this is going to happen, but this is what I'm kind of waiting for Apple to pull back in price. It's made all new highs here. So when a stock pulls back after making new highs, it is actually an opportunity to now ride it back up to where it was. So that's what I'm looking at. And one of the things I just wanted to show you guys, Apple can, if you're trading a $10,000 account, Apple call options can be quite expensive, and you'd have to really manage these a specific way, in that you would have to either buy something further out of the money so that you can stay within your risk parameters, or you'd literally have to, if you were buying an at the money option, if this thing drops because it's costing you $10, so if 3 days from now it's only worth $7, you technically have to get out of it because you lost $300 and your risk is too high. So if you're in a position like that, just change over to the verticals. And this is kind of what I'm looking at. So if I were to get into Apple, this is what I do. I just buy a call debit spread. It's the same thing, except your risk is capped in each trade. In a call option, your risk is capped to what you paid for it. In a debit spread, your risk is capped to what you pay for it. The difference is, in a call option, the max profit is infinite, and in this one, it's maxed at 272. But if you look at that risk parameter, that's pretty darn good. Risk 228 to make 272. So that's just an opportunity to be able to trade some of the bigger stocks. And I'm going to steal something Travis said while we were talking about this before we started recording. Instead of, because I used to do this, I can't afford Apple, right? So I would tell myself I can't afford it, and I'd stop following it. Instead, use the Robert Kiyosaki method. How can I afford Apple? I want to trade Apple. Apple's a great stock to trade, right? So how can I afford it? And I just showed you guys a way you can afford it. Trade a debit spread. It's the exact same mechanics as a call option, except you're able to afford it. That's basically it. That's it. I mean, I have no new trades other than the ones I covered last week. They're long-term. They go out till January, so not as long as Travis's long-term trades, but I'm working on other trades. That's just one of the ones I'm looking at. So hopefully I gave you guys something to keep you busy if you're not doing any trading in this crazy month. And just so you know, I think one of our members put it out too, and it's kind of something Travis always used to talk about in our members' calls, in our webinars. This is typically, if a market's going to drop, this is typically when it drops. So usually these months you start to see volume fall off. And if you guys rewind the video and look at when Travis covered SPY, you can see it's going up, making all-time new highs on really low volume. So not a whole lot of faith in that it's going to continue that trend. You just need one fund manager to exit his positions to wipe out all that profit. So just waiting for that to happen. No, if you're in a trade at SPY, I know one of our members got in based on a weekly, and that's good. I'm glad it's up for him. So it's doing well. And I was telling Travis, I'm like, I'm glad to see Apple down. And he's like, no, I'm in an Apple trade. So I'm not glad it's down. I'm hoping Travis's trade, or I'm optimistic Travis's trade will work out, and then Apple will pull back and give me an opportunity. So
yeah. Hey, I don't care now. I've put in a call, so I don't care what it does. All right.
That's it. That's all I got.
It. Did I cover? I can't even remember my brain. Did I cover the general market?
You covered SPY, so you may not have covered the general market. I'm
Well,
not
that's
sure.
the general market. I don't even remember talking about it. That's sad. I remember pulling it up. I think I just got distracted with an idea in my head. But yeah, if you can cover it, because I didn't talk about the channel, I didn't talk about all-time high, none of that.
Your channel was a little different. Your channel was a little higher. Mine was more at the last top. So your channel was just above where it's at now, which is fine. I mean, this is basically I didn't extend these lines out, but you can see the channel, and I don't know how to extend them out on this
Yeah.
one.
I drew my
But
lines wrong, and I was too lazy to change it.
Yeah, you can kind of see the channel, and it's so what's the stock market telling me? Now it's telling me, on low volume, it's going to keep going higher. So whoever's participating in the market is bullish. That's their position. They're bullish. If I'm going to get into any trades based on this stuff, then it's going to be a lot farther out and a lot less risk just because of that volume. I don't want to try and predict the market or anticipate the market. But the low volume is the only thing that concerns me here. It's going up. That's great. That's what everyone likes to see. So just be cautious when, everyone's starting to get greedy, it seems like. So be cautious when others are greedy is kind of a good saying to go by.
But yeah, it's news, man.
What's that?
It's because they're watching the news, and CNBC is like, oh, the market's at all-time new highs, and everybody's like, oh, I'm missing out, and they're going to jump in, and right when they jump in, that's when the market's going to fall.
I'm wondering how many, that's my conspiracy theory of how many fund managers own the analysts and CNBC.
Ooh, that is a good conspiracy theory, man. Let's bait them in so we can profit off them by selling our stock as soon as they get in. I would not put it past them at all.
That's every, the weak get kind of left aside. And the bottom line is if you have a really good strategy and a good trade plan, then, like your new trade plan just kind of eliminates pullbacks. Yeah. Because you're taking advantage of, you showed this a bunch of times. I'm not going to change the chart and show it because it doesn't need to be. But if you look at a long-term monthly chart, so these are daily price closes. If you look at a monthly price close chart over 25 years, you'll see that if you're generally the market does good during a month. It only has a few bad months out of a given year.
Yeah.
So you're actually increasing your chances of success by doing that. So, but again, like we've always said, market doesn't care what we think. Do I think it's going to continue going higher? I really don't, but it doesn't care what I think. Right now it's going higher. So if I were getting in trades, I would, but I've talked about why I'm not. And I'm pretty much done. Any new trades are for next year's spreadsheet. So that's it.
All right. Well, that's it. That's a wrap for this week. Oh, I have a very sad announcement. I'll go ahead and end on a very sad note. I forgot to talk about this. We're going to go ahead and announce the admin note now. This will be you all, and only because you all have the public, not Success Academy members, but the public, you probably only have maybe 4 more recaps. We generally take the month of December off, and we're not doing these next year anymore for the public. We'll still do them for Success Academy members. We don't know if we'll keep the same schedule. We'll determine, but we have determined that we're no longer going to do these for the public. We're just going to do these for our members. But you all have a year, maybe 2 years of archives. I'll make sure I'll organize everything. So don't feel left out. We'll organize everything. And if you go through every one of our recaps, that's a PhD level in education alone. Just tips we've given you every single week over the last year as far as how to succeed at the market. So I wanted to announce that now to give everybody a heads up. So you have about 4 more for the public. And Success Academy members, though, will be back next year with bigger and better things.
And here's the thing too, and maybe you can throw this down into the bottom. At the bottom of it, leave a link to learnstockoptionstrading.com. If you go to that website, it's a free website. This is how I got started with Travis. I went to that website. It teaches you 9 modules, I think you have. Is it 9 or 8
7 or 9, something like
modules?
that.
7 or 9 modules, yeah. And it teaches you the basics of options. And what most people don't realize is every strategy is based off of those basics. So if you understand the basics, you can do just about any strategy. Believe it or not, you can. So if you go there and you get hooked up with that, you'll know when the programs that you can get involved in. If you like what you see and you want to learn more, you'll have that opportunity. So by all means, don't pass up that opportunity. And you can learn options trading for free. Or if you've done options trading, it's a good refresher lesson, because there's not too many programs out there that show what you show on your free site.
No. Priced at $3. Yeah, I had somebody price it out. It's like it's $3,000 of value here. They were like, man, I've even like not for value like, oh, how much money I can make. They're like, no, even if you hired somebody to write all those articles, it would cost you $3,000. Just that alone. I'm like, oh, I never knew that. That's not even including the stuff that you actually learn, because it is stuff I paid to learn. I paid $9,000 to learn that, but just gave it away for free. And then people were like, hey, can you coach me? I was like, no. like, I don't want to be one of those gurus, but they tugged to my heart. What do you say?
And now he is.
Yes, and now I am. They tugged to my heart, so now I am a coach. So thank you. It's my greatest joy. But I'm going to go ahead and get your link too, Peter. So what I'm going to do when I organize everything, I'm going to put both of our links there.
Okay.
The JP Classroom link as well, as because we're both on here. So I'm going to go ahead and put both of our links on all of our old videos. So
okay.
All right. That's it, everybody. Hey, you all take care. See you next week.
Next week.
All right. Bye-bye.